the signs of economic stabilization began to show up late fourth quarter. But of course, we've been in this dichotomy between real economy and the financial market, as what you have been reporting. Financial market, has been, influenced by all these jitters and policy uncertainties. But real economy, I think, is really showing signs of stabilization. We're of the view we'll see a mild recovery beginning of the next year. Our forecast at least is 4.5% growth in 2024.
When you say 4.5% growth, are you referring to GDP? We did hear from... Okay, so we're expecting the National People's Congress to hold their annual parliamentary session come March. Run us through some of the expectations in terms of your economic forecast. So you've laid out your GDP. What about inflation? What other expectations do you have?
Well, I think most people probably take the view you need to have a strong growth target around 5%, because that will send a signal. The policy framework is still very much for growth. That's the argument for that. The argument against that is, as Lin has shown, all this corporate profit number suggesting in the economy, we still have this Chinese term involution, which means overcapacity. So with overcapacity in manufacturing sector, you really do not want to stimulate industrial sector that much, because that would create a further overhang in the medium term. So on balance, I'm in the camp of not having an ambitious growth target. That's why my forecast is relatively moderate, conservative, 4.5%.
Hey, Sitao, it's Lin joining in on the conversation. As you said, that 4.5% for the growth target next year, some economists have it around that 5% mark. I think it's basically consensus that we're not returning to double digits here when it comes to Chinese growth. I'm just wondering, how painful do you think it is going to be for China in terms of extricating itself from this property slump and this renewed focus in terms of dealing with those structural issues going forward?
Property sector is going to be painful, but there's no systemic risk. For consumers, most of them, they still have a lot of equity. And if you look at Beijing, Shanghai, first-tier cities, the down payment remains extremely high. So, I wouldn't compare the housing sector's problem, with some of industrial countries have gone through many years ago. There's very little forced selling. So I think, we are in the era of post-property, growth model, meaning property sector won't add anything to growth going forward. But I wouldn't be too pessimistic. I think the government still has quite a few tools. So, for example, I think the government can step in, purchase many unsold properties, and that would give some confidence to potential buyers. I also think mortgage rate can be cut further. So there are still more tools.
Yeah, and when we talk about, I suppose, the pressure in the property sector, can we see, do you think, consumption improving in sort of this two-speed manner?
Stabilization of consumption, which I earlier alluded, I think can be seen in sector of auto sector. So if you track auto sales, I think that's quite evident. If you look at mobile phone sales, that's also quite evident. This year, I think sector related to travel has been doing extremely well. But of course, property is the biggest one. I think right now, what we're seeing is first-tier cities reasonably okay, second-tier cities going through some difficulties, and the third-tier and fourth-tier cities due to unfavorable demographic. I think it's going to be extremely difficult. But I wouldn't say we are getting into a crisis. I think next year will be better.